Hey everyone, Sam here. Let's get started. You should be able to see the screen. Sound should be fine. Welcome to another edition of Supply and Demand Zones that Work. Don't limit your challenges, challenge your limits. Always a good thought to live by. So again, for those that are new to these sessions, I am the developer of the original supply and demand strategy. And we decided to put these short sessions out there because there's so much supply and demand information out there today, and a lot of it's confusing for people. People that have never traded the strategy, have added all kinds of stuff to it, teach it, and all this other stuff. So thought we'd do these sessions to help eliminate confusion and build confidence. So let's move forward. I am a licensed fund manager, but the Pinnacle Institute is not an investment advisor. There certainly is no guarantee of success when it comes to trading and investing in the markets. In fact, available research does suggest that most active traders lose money. And so take your time, make sure you understand risk, make sure you're okay with risk, and don't rush into this. It will always be here. Take your time and make sure you understand how to do it right, the risk, reward, all that. So we're going to look at a trading opportunity that met entry very recently and just the other day, and price has been moving down, as you can see here. So it's a supply zone in the Russell, and over the past this week, the Russell has been declining from the supply zone, right? So we're going to go over something very specific here. Notice the supply zone itself, rally, base, drop, supply. Notice the gap, okay? There's a gap down from that level, and when price came back to the supply zone, it gapped up and then rallied a little bit more to reach the supply zone. As I always say, competition to sell at supply, which is what supply is, caused price to turn and pushed it lower. Make sense? Okay. But we can go deeper. Notice there's a gap down away from the level. And again, there's a gap up, which brings price to the level here. All right. We're going to come back to this chart in just a minute. Today, we're going to learn the pro gap and then the novice gap. These are two types of gaps. I developed these many years ago. Again, it all started by just observing price action and trading on the trading floor of the Chicago Mercantile Exchange. And this is primarily from watching the two groups that are always at play in the markets: professionals and people who know what they're doing, and novice traders, people who don't. Okay. So a pro gap, okay, a pro gap tends to ignite moves and suggests a big imbalance at the origin of the pro gap, right? The definition of a pro gap is a gap in price after a move in price in the opposite direction of that move. That's the pro gap. Typically, the low risk, high reward, and high probability entry is to buy a pullback to the origin of this pro gap. Next, we have the novice gap. Okay. Why is it a novice gap? Why do we call it that? Because here price is declining and then it gaps down, meaning whoever's selling down here is not only selling after a decline in price, okay, but they're selling a gap down in price after a decline in price. Typically, only a novice trader would do that. Certainly, a professional would not do that consistently because you consistently lose money doing that, right? And again, just that definition, the novice gap, which is opposite of the pro gap, is a gap in price after a move in price in the same direction as that move. Make sense? So a novice gap into a pro gap is one of the highest probability trading opportunities we have. Now, if we come back to the opportunity we were going over in our live trading and analysis session, here. Notice on the setup, we are giving this, going over this opportunity with our members, rally, base, drop, pro gap. So we had a pro gap down, right? Suggesting a big imbalance up here, professional selling, right? That's this. Here, price rallies, 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 and then we have a gap up. That is a novice gap. Novice traders on the buy side, professionals likely on the sell side here. We know who's going to win that matchup most of the time. Price ends up falling as it should. That is the pro gap and the novice gap combined with our supply and demand analysis, all from the original supply demand strategy. Hopefully that was helpful.